Imagine it's the year 2010 and someone told you to buy Tesla at just $3 a share, back when it was mocked as a niche car company for rich Californians with a strange-looking roadster and a dream that seemed impossible. Most people laughed, some ignored it, and only a handful of bold investors took the leap. Fast forward a decade and those same investors turned a few $1,000s into hundreds of thousands, even millions. Now here we are again, standing at the edge of a new wave, because the electric vehicle revolution is not a dream anymore. It's the reality shaping the future of transportation, energy, and technology. Governments from Washington to Berlin to Beijing are pumping billions into green infrastructure, mandating phase-outs of gasoline cars, and creating the largest industrial shift since the invention of the automobile. And while Tesla has become a household name, the truth is the race is still wide open, because dozens of new players, big and small, are fighting for a slice of the EV pie. The big question is, who will emerge as the next Tesla by 2026? In this video we're going to explore 10 EV-related stocks that could potentially explode in the coming years, companies with innovative technologies, powerful backers, and markets ready to grow exponentially. And as always, this is not financial advice, just insights to help you understand where the future might be heading, because if you miss Tesla's rocket ship, you may not want to miss the next one. Let's start with NIO, often called the Tesla of China, a company that has redefined the EV experience by pioneering battery swapping, meaning instead of waiting 30 minutes for a charge, drivers can swap out their battery in just 5 minutes and hit the road again. That's a game changer in a country where EV adoption is skyrocketing, and with government subsidies, strong branding, and global expansion plans, NIO could be one of the few Chinese automakers to break into Western markets in a big way. Then we have Rivian, an American EV maker backed by Amazon and Ford, targeting the lucrative truck and SUV segment, which Tesla hasn't fully captured yet. Think about this. Amazon has already ordered 100,000 Rivian electric delivery vans, guaranteeing Rivian a steady flow of demand for years, and if Rivian can scale production, it could carve out a dominant niche in electric adventure vehicles. Next, let's talk about BYD, a Chinese titan partly owned by Warren Buffett's Berkshire Hathaway. BYD isn't just an EV manufacturer, it's a vertically integrated empire producing batteries, buses, and even controlling raw materials, giving it an enormous advantage over competitors. In fact, BYD already sells more EVs in China than Tesla, and with its growing international push, this company could quietly become the global leader before 2026. Moving on to Lucid Motors, which is taking a completely different route by focusing on ultra-luxury EVs. Their Lucid Air sedan boasts one of the longest ranges of any EV on the market, rivaling and in some cases surpassing Tesla's flagship models, and while they face production challenges, their technology and engineering have impressed industry experts. If Lucid can execute, they could dominate the premium space much like Tesla did in its early Model S days. Next up is Fisker, targeting the affordable EV segment with stylish yet budget-friendly options like the Fisker Ocean. This is critical because while Tesla and Lucid appeal to higher-income buyers, the mass adoption of EVs depends on affordability, and Fisker's strategy could capture millions of middle-class consumers looking for sleek, sustainable cars without breaking the bank. But let's not forget about the companies powering the EV revolution behind the scenes like QuantumScape. This isn't a car maker, but a battery innovator working on solid-state batteries, a technology that could completely change the game by delivering faster charging times, longer ranges, and better safety. Imagine an EV that charges in just 10 minutes and drives 700 miles. If QuantumScape succeeds, they won't just power one automaker, they could supply the entire industry, and that's why many analysts see them as one of the most disruptive players in the EV space. On the topic of disruption, we can't ignore XPeng, another Chinese EV company, known for its cutting-edge autonomous driving features and futuristic designs. XPeng is not just selling cars, it's selling smart vehicles equipped with AI, sensors, and self-driving tech that could put them head-to-head with Tesla in both China and Europe. Speaking of infrastructure, one of the most overlooked but essential plays in this space is ChargePoint, one of the largest EV charging networks in North America and Europe. Think about it. Every single EV that rolls off the production line increases the demand for charging stations, and ChargePoint's business model ensures it benefits from the growth of every car maker, not just one. Then there's Li Auto, another rising Chinese star, which has cleverly bridged the gap between traditional cars and EVs by offering extended-range electric vehicles, combining batteries with small gasoline generators to ease consumer fears about charging availability. This hybrid approach has made Li Auto extremely popular in China, and as charging infrastructure catches up, Li could seamlessly transition into pure EV dominance. Finally, let's talk about Albemarle, a company you might not have heard of, but one that plays a critical role in the EV revolution. Albemarle is one of the world's largest producers of lithium, the key ingredient in EV batteries, and with global demand for lithium expected to triple by the end of the decade, Albemarle is positioned as the pick-and-shovel investment of the EV boom. Remember, during the gold rush, the people who sold shovels often made more money than the miners, and Albemarle is the modern version of that story. Now, before you start rushing to invest, it's important to recognize that the EV industry is highly competitive and volatile. Not every company will survive. Some will crash and burn, others will get acquired, and only a few will dominate. But if you take a step back, the big picture is undeniable. By 2030, more than half of new car sales in many countries are projected to be electric. The global EV market is expected to be worth trillions, and companies that win this race could create life-changing wealth for their shareholders. The key is patience, diversification, and doing your own research, because while chasing the next Tesla sounds exciting, building a portfolio of multiple EV plays increases your chances of catching the winners. Think about it like this. If you had spread your bets in 2010 across Tesla, battery suppliers, and charging companies, you'd likely be sitting on massive gains today. So ask yourself, what if history repeats itself? What if one of these companies becomes the Tesla of trucks, or the Tesla of batteries, or the Tesla of charging networks? By 2026, the EV landscape will look completely different, and those who prepared today could be the ones telling the next generation how they caught the wave early.